Good morning, everyone. This is Josh Hayes with Hedge Plus, and this is the market monitor for Thursday, December 4th. Coming in this morning, overnight trade is pretty flat. Corn is down about 1, soybeans are up about 2, and wheat is flat. Nothing too dramatic overnight, not much to drive the markets. The biggest thing right now still remains to be with China. There's still a lot of skepticism and doubt being expressed about China. People still just attach the idea that our price level, China's not going to follow through on their purchases. And I'm sure that's a lot of that has to do with the past and the commitments they've made in the past that they didn't fulfill. But as far as we can tell, still no indication that those purchases aren't going to be made. In fact, to give you an idea of the the difference between people, the way people are looking at this, yesterday, Treasury Secretary Besant indicated that China is still on track to make its purchases, the 12 million metric tons. But the one that note he added is that he expects that to happen now by the end of February. Well, that change in timeline, some people thought it had to be by the end of the year. I think originally the talk was by sometime in January. So looking at probably a timeline that's been shifted 1 to 2 months. If you ask me, I'd say 1 month. But just that shift and that new news that the purchases probably wouldn't, those 12 million metric tons probably wouldn't be fully purchased until February. It was actually taken as in a negative light. Then the markets were down yesterday because of it. There was a lot of pressure coming from that, and especially with soybeans and pulling the rest of the market down with them. Um, but it's just a skepticism that hopefully once these purchases are made, there's also, it doesn't help that there was no flash sale announcement yesterday. Same thing happened last week. The announcement, the rumor came that these purchases were made. The next day, there was no flash sale announcement. Well, then then 1 day later, it came. Perhaps we'll see a flash sale announcement from the USDA today. Getting into what we're weighing right now, another new all-time high was set for the week ending November 21st, or ethanol production, over 16 million bushels per day. Use of corn, that's obviously very welcome right now as we look to churn through supply with what's anticipated to be a record crop on the way. The good news about our prices being as low as they are right now, I know everyone would love them to be higher, is that our price is very competitive. We're still the lowest priced corn on the market. And now we've even got some talk that China could be in need to purchase from us because they had a lot of flooding rains that damaged their crop there. And China could be buyers soon. And trade deal or no deal, whether corn is in the trade deal or not, there's no reason for China not to buy from the U.S. given our price right now. On the negative side, as I mentioned, Besant's comment about China being on track to buy their beans now by the end of February, pushing that timeline, all that really did is invite more skepticism and doubt from people. And they're also attaching that to prices dwindling down. But I think a lot of people don't understand is the rally we had everything to do with China's purchases as they were making that before confirmation came. And and now we're just starting to see what we typically would see at this time of year. We've got farmers making sales. We've got tax considerations right now before the end of the year. Last year at this time, we were very choppy like we are now, but it ended around the third week of December, and I think we could see something similar like that. And then, of course, we're anticipating USD adjustments in January that should be helpful for the market. Another factor kind of holding things back is there's still a lot of people, believe it or not, holding on to the idea of 186 for yield with corn. And while we can't rule that out, it's certainly not something we believe is going to be the case. I'm sure there was a lot of doubt at this time last year when the USDA really didn't touch yield in November. And obviously, they typically don't in December as well. But then they dropped uh, yield 4 bushels per acre in January. We're expecting something similar to happen again this year. Taking a look at gray weather, Corn Belt mostly dry, but very cold now after the snow that came last week. I know there's some rain coming in the southeast that should help alleviate some drought concern there. Obviously, they'll need a lot more. Always emphasis on Argentina and Brazil. Argentina is having some dryness now, but they had gotten so much rain and were in such a good spot that the dryness now is somewhat welcome, not problematic yet. Brazil, where it has been too dry, central and northern parts of Brazil, the forecast is much improved. That's also been somewhat of a pressure point on the market. There was a little bit of weather premium starting to get built in that I believe we're seeing go right back out this week. Is the forecast has it's been a more certain forecast for rain. Now we still, like many times, have to wait and see if the rain actually gets there or if it disappoints. But the forecast seemed much more assured this week for rain in Brazil. So we'll take a little watch to see if that comes to fruition. Finally, taking a look at international prices. You can see here, U.S. very competitive best price for corn. Everyone knows we're considerably higher than Brazil and Argentina. With soybeans right now, that's why it's definitely imperative that China does make these purchases. They have shown they are willing to overpay to meet the demands of this trade deal so far, and there's no reason for us to doubt that they won't continue to do that. And also, finally, you can see wheat markets really held down by the fact that what's coming out of the Black Sea, Ukraine, Russia, and the Baltic states, Northeast Europe, all priced considerably under the U.S. That'll be it for this week. One thing I do want to mention is that we did add a new feature on our website, another app. This one is called the Repair or Replace Calculator. It's actually really useful, especially maybe this time of year when you're trying to make some decisions based on taxes and whatnot. But it tells you based upon a repair bill that you'd have for any piece of equipment, whether if you take that repair bill, you factor in trade-in costs, you factor the cost of new equipment, and also you factor in the size of your operation. And it'll tell you whether or not it makes more sense to make the repair or to invest in new equipment. And it factors in everything. It factors in interest, depreciation of both the old and new equipment. And it's very simple to use. 4 data fields entered, and you have an instant result saying either repair or replace, and exactly what the breakdown per acre cost would be for either route. So go ahead and take a look at that on our website under the advisories tab, advisory services. I hope everyone has a great week, and we'll see you again next week.